All right, guys, what is up? Back here today with me, Issa Wolf Trades, and I'm going to be going over some supply and if you're a supply and demand trader, you trade supply and demand. You're ICT trader, you trade market structure, imbalance gaps, liquidity sweeps, whatever you guys trade. This video is for both people, and I'm just basically making this video to show you guys and give you guys some tips on what's working for me as a supply and demand trader, and also I use some ICT concepts as well. But I want to show you how simple my methodology is, and I just wanted to share it with you guys and see what you guys think about it. So before I actually trade anything, and this is with Forex and futures because I trade both, I go on the economic calendar, and on the economic calendar, I go and I check and I make sure that there is actual news being released, that there's volume. Because when the market doesn't have volume, and this doesn't matter if you're a futures or a forex trader, when the market does not have, sorry guys, when the market does not have enough volume, what tends to happen is the market will not move. There's no volatility, there's no volume, the market isn't going to move as much. And this economic calendar that I have set here that shows me only the red and orange represents the medium to high volume or volatile news events that will make the market actually move physically on the screen. And that's literally how I find most of my supply and demand trades, because all of this stands for supply and demand. For example, if you're still a forex trader and you trade forex, if you're a futures trader, let's go for futures. If you're a futures trader and you trade gold, US 30 NAS, you're going to want to look at and pay attention to what the US dollar is doing. So if the US dollar is moving on Monday, like on March 24th, then you're going to want to be expecting potential trade setups on that day. Now, you can trade before the news or after the news. I trade during my trade session, and I find my setup within there. And once you find the news and know, like, okay, so the US dollar currency is moving, that's why I went on here. This was before Swiss franc, and I noticed something. The trend was bearish, right? It looks bearish. The trend was bearish on Swiss franc. Let me just clear the charts a little bit. A trend was bearish here. We have, because of market structure right here, and the blue lines represent that I have drawn. And I actually should have drawn another one. I only use 4 pieces of market structure for my trend when I'm doing and identifying my trend. I use 4 exact pieces of market structure, and those 4 pieces of market structure are basically on a higher time frame. So by a higher time frame, 30-minute time frame and up, I will do my market structure on. If you're an ICT trader, you know what that means, or if you're a supply and demand trader, the trend. And then what I do is, as you can see, the trend is bearish, it's bearish now, still bearish technically. And the reason is because we have current high, and our current low is here, and our current high, previous high is back here, and our current previous higher low is over here. And that creates a downtrend because here is why. When you're in a downtrend in any market, forex or futures, it looks like this. It goes down, up, down. Because the market just doesn't go straight down, right? The market always recorrects and retraces itself. So it goes down, it goes up, down, and then your job is, when it goes down again and adds new supply, if you're selling, is to get in on this retracement before it continues to go down, right? So that's looking like, right. Sorry, I'm just doing something. So that's looking like right here. And so what you're going to want to do is apply the same concept when you're buying. So if you're buying, it is this. It's up. Let's say we have some US dollar news. If you're trading gold and you notice the US dollar moved this morning and added the demand, and because of that demand, the market went up, right? Okay, now that the market went up, your job is to enter off of that retracement. So you can go up, retrace, and then the trend continues, or you can enter on the second retracement, which is here, the pullback, and continue. And so your job as a bullish trader, if you're buying, is to buy low on the pullbacks. The pullbacks are always pulling back to a low point before taking off to a high point. And this is important if you're any type of a trader. You're basically, if you're a smart money trader, if you trade supply and demand, it's all about getting in on the pullbacks. When there's demand and then the market goes up and it expands, there's always a pullback. And That's basically what I do. And I only trade 2 trade setups. I trade order blocks and I trade gaps, which are created by the market, not pulling back. So before the market pulls back, there is what's called a price range. And the reason why I call it a price range is because it looks like this. The market, let's say it's going down, right, up, and then it made this pullback here, right? So, I mean, not pullback, it went straight down. And before it pulled back up, here's what I do. I take my tool, or I draw, and I draw my low and I draw my high, right? And so when I do that, then I wait for price to come back up at least 50% of this price range. Now, what is the price range, you're asking? What is that? What do I mean by range, price range? Not consolidation. Your price range is your current high and low of price, because you're trading on a chart. And each area that you can see on the chart has a price level. And at those specific price levels, that represents your range you're trading in. Even if you don't trade consolidation and you have a trend, you're still trading in a range, because the range and the limits of that range are created by your trend lines, your market structure. So yeah, it's really simple. And I just wanted to break this down for you guys. And I hope you guys actually found this helpful in any way. I'm going to have to end the video here. I know it was a short video. But let me just go ahead and show you what I did here. So the trend was bearish, and here's what I noticed something. I had a 1 hour supply zone, and I'll go ahead and give away this type of supply zone because I don't trade this as much as my other supply zones, and I don't want it. I want to like give you guys something. So here's what one of my supply setups look like. So for one of my supply setups, I trade as this. It looks like a I can't believe I don't know the name of my own setup. It looks like, because it's called something different than what I learned and what the candle's called. So when you trade forwards, you learn about what this specific candle I'm pointing to is, and you guys probably know this better than me. But these are basically my supply zones. They have a candle in the middle, a body in the middle, and they have 2 wicks on each side. I usually go off the supply zones that have even wicks. I'm very sorry. It's on the tip of I should know the name of this. I have it in my head before. My brain's just, yeah. So it has a body in the middle and it has 2 even wicks. And those are my supply zones. And these supply zones are actually more visible if you change your charts to the Heikin-Ashi charts, which are, if you don't know what a Heikin-Ashi chart is, it just looks like this. You just go and change the chart, and now it's this. And it's basically smoother price action. So yeah, let me just change the screen back. So here's what I noticed. So we were bearish, right, like I said, and then price broke my supply zone on the 1 hour. I always label your supply and demand zones. If you're a supply and demand trader, ICT trader, always label your zones. So if you go on multiple time frames, you are sure of the zones that you're marking up. So if you're on the 30-minute time frame and you have a box labeled and it says the 1 hour, then you're like, okay, so this was on the 1 hour, because then you're gonna get confused and not understand which time frame it is you found your supply and demand zones or your order blocks, your fair value gaps, imbalance gaps. So 1 hour supply, it broke my supply. I noticed that, and it broke my supply with what? The beginning of this break. But first, let me show you where it broke. It broke right here, right? You see the 1 hour supply box, which is right here, and then price came and broke out of that box. And the beginning of that, we had price what? Down here, we had some demand here, right? We have a demand zone here, and then after we had some demand here, we had this giant candle of demand, and then that giant candle was the cause, and it was the fuel of this breaking my 1 hour supply. So I noticed that. It's like, oh, so there must be demand in the market, and the market must be shifting. And so what I'm doing now is I don't simply just enter just because it's doing that, because sometimes you can have demand and the market will go right back down. I'm patiently, now that I noticed that demand, I'm not going to just, oh, I see demand, trade. I'm going to be patient, because I have a strategy, which is my discipline, and I follow the rules of that strategy to be disciplined and win. And so I'm waiting for price to come down to this demand. And then once it comes down, like it's doing right now, you see how price is tapping into that demand with the rejection candle? And I'm pointing the white arrow to it right here. There's a candle, and then that wick right there. If you guys can't still see that, it's under my face. There's a wick under my face right now, and that's rejecting that demand. And what I'm expecting is price to go like it's tapping into that demand and to break this liquidity right here on the 1 hour, this bearish liquidity, because people still trade trend lines and they're going to trade that and think it's bearish and try to sell along that green line that I have. So yeah, so price came down, tapped into that demand, and now I'm expecting price to break green line and take out that demand. Take out that liquidity, specifically buy side liquidity. Buy side liquidity is liquidity if you're buying, is liquidity above you, and sell side liquidity if you're selling is beneath you. So liquidity for me looks like popular areas where there are traders and their stop losses are at. So popular areas, retail traders have their stop loss placed, and then the institutions, smart money, the market, the whales will take their liquidity, take and break their liquidity. And so for me, trend lines, double bottoms, double tops are liquidity for me. And that's what I trade. I use that as my take profit. I enter trades after that's broken. So yeah, so now I'm going to wait for that's broken again for another demand zone, and I'm going to enter off that demand zone, and that's going to confirm the trend is actually changing, because price right now is still within the bearish trend as a whole of my blue lines. My blue lines represent the market structure that I have here placed, and I'm waiting for price right now to actually come from the point it's at right here and come and break out of this of my high here, which is right here. This is the high I want price to break, and once price right here breaks that high, I'm going to actually get in. And that's basically what I wanted to make the video about. I hope you guys liked it. Peace out. And oh wait, one more thing. If you have any questions, ask me. I have a free trading group. The Discord, it's free. You can join for free. I do obviously have paid services. I don't have courses, guys. There's no courses. I do have a digital product that you can take a look at if you're interested in. And I also do one-on-one. I don't do courses. I only do one-to-one, face-to-face. That's just how I work. And also I don't accept everybody. You have to apply for it. And by apply, you don't have to have crazy I just need to know that you're actually serious about wanting to do this, and you're actually are going to be focused and disciplined, and you're not going to just be like, oh, I'm going to do it, not show up and then trade. And I don't like working with people like that. So if you're a person that's actually trying to find a consistent strategy that you can use every week, and you're tired of just hopping from strategy to strategy on YouTube, then this is going to be for you. Because I know I was there. I used to hop from strategy to strategy. I was writing down things. I was like, okay, I'm going to do this. But then you go and see another shiny object. Then you go to another video, and then you don't have a strategy. You need to, and here's how you find a strategy. Number one, you find that it physically works. You see that the strategy works, and that develops trust. And then you also have to connect to the person that's teaching you the strategy. And if you have those two things, and you resonate with the teacher and the strategy, then it's easier for you to actually learn to trade. So it's not that it's hard. It's just that you need the right teacher, the right mentor, and the right person. And people don't like to pay for mentorship, and they don't like mentoring and all that stuff, but that's just reality business. I used to think I can just do everything on my own and get rich quick and figure it out. But the reality is you need a mentor that has experience, that shows you the steps. And a lot of people are arrogant. They think they can piece everything together, but you can't, because if you did, you would be profitable. So people need to realize that you need someone that's winning, and you need to listen to them and listen to every step they tell you to do in order to win and have results like them. But yeah, guys, I hope you found this video helpful. I'm going to end the video here now. Peace.